Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is BTS, that's Behind the Scenes, a show where we share a sneak peek into the latest Business Today magazine with all our viewers. Joining in on this show with me is Anand Adhikari, the managing editor of Business Today magazine. Also with us is on this show Krishna Gopalan, the executive editor of Business Today magazine. Welcome to both of you and thank you so much for taking the time out for this discussion. And first up for all our viewers, a quick glimpse into the latest edition and how it looks. Well, that's the cover that you really look at. Of course, it's a special edition because it talks about the best banks, which is the 28th Business Today KPMG survey of India's best banks and NBFCs as well. So you do have Rajiv Jain, the MD of Bajaj Finance, up on the cover. You have Uday Kotak, the founder and director of Kotak Mahindra Bank, Shashidhar Jagdishan, the MD and CEO of HDFC Bank, and Sandeep Bakshi, the MD and CEO of ICICI Bank, all of which have been big winners for this year as well. Anand, to start off with you, of course, we've seen this massive event for the Business Today viewers, the Best Bank Awards, just a few days ago, and in Ahmedabad, in Gift City, that was the major talk of the town across, media houses across the country as well. And of course, it was a marquee event. But when we talk about the crux of it, what really led to this event, the major highlights of the BT-KPMG study, the categories that you had, the winners and the surprises, if any.
Thank you, Sakshi. So, the BT Best Bank study is the most respected, long-standing study in the market. And, the way we do these studies, we divide this study into two parts. One is the quantitative part and the second is the qualitative part. Within quantitative part, we evaluate banks and institutions, broadly on three categories. One is the growth, second is the size, and third is the strength. And within these three broad categories, we have 35 plus parameters. So within growth, we have growth in advances, growth in deposit, growth in operating profit. Strength, we look at the size of the balance sheet, the size of the operating profit. And on the strength parameters, we have ROCE, ROE, capital adequacy, net NPAs, cost to income, even divergence in NPAs, and things like, secured advances to unsecured, the ratio. And based on the kind of winners we got, so in the large best bank large category, we had SDFC, as the best bank, and we saw ICICI Bank is catching up very fast in the last 2-3 years, and this year, since the data is for FY 23. So the merger numbers are not there. I'm sure next year we'll have ICICI, coming up in the ranks. In the mid-size category, we have got Bank of Maharashtra, and the interesting thing about Bank of Maharashtra, that is based in Maharashtra, but 3 years back they came out with a strategy, of opening branches in all the major districts of the country, and that's how they are getting huge deposits, from cities like, let's say, Patna, or centers like Delhi and other states, and that shows in their CASA ratio. Today they have the CASA ratio, is the highest CASA ratio in the banking industry. I mean, it's more than 55%, and that is helping them, to do things like mortgages and all that. And again, when I looked at the mid-size category, IDFC Bank is catching up very fast. So IDFC Bank is number 2, this year. I'm sure next year the ranking will change. If you go to the small banks, we have Karur Vysya Bank, after a long time. But the number 2 is CSB, this Prem Vatsa owned, Catholic Syrian Bank. And again, CSB is catching up very fast in that category. Surprises there on the small finance bank. We got Ujjivan, small finance bank as a winner. And in the last 2 years, we had AU Small Finance Bank. And if you look at the stock market performance, the way AU has done in the last 4-5 years, this year is a setback. Ujjivan has displaced, AU there. And for the first time, we did, we include NBFC category in our study. And no surprises there. Bajaj Finance is the, winner. So there are, 16 categories, 17 awards. So, and a lot of surprises there. So I want viewers to read the copy.
Right. Anand, I also wanted to ask you, of course, we do know that after a long haul, we are now seeing banks which have the best of balance sheets today, lowest NPAs. So the worry points are a thing of the past. Capital buffers are there. There is a higher profitability, be it in the private sector banks, be it in the PSUs banks as well. What are the challenges right now for the banking industry going forward that you foresee?
So Sakshi, if you look at the banking industry, there are two sides. One is the liability side and other is the asset side. Liability side is the one where they get the deposits, low cost deposit, and asset side is the side where they lend. I mean, it's the assets, the home loan, car loan, and other loans which they gave. Now, on the liability side, the big challenge is on the CASA. The CASA is the raw material for banks, the low cost current and savings account, and that's where we are seeing a lot of challenges because of liquidity got tightened in the last 1 year, and I have seen the CASA ratio of big banks falling, and that's where the I see a big challenge for banks. And for our Lifetime Achievement Award, we met Uday Kotak, and he was talking about a big structural shift which is happening from savers to investors. So all youngsters today, they prefer to invest in equity and mutual fund rather than putting their money in fixed deposit where they are getting very low returns. And I was also talking to one of the bankers. He jokingly said people are also putting money in this gaming industry. So a lot of money going in the gaming industry also. So I see a big structural shift that is happening on the liability side, and I see banks facing major challenges. Now coming to the asset side, if you see the last 10 years, we saw huge NPAs on the corporate and the mid-size category, and we saw banks getting big time into on the retail side. Whether it's SBI, Bank of Baroda, or you look at SDFC or ICICI of the world, they have a higher proportion of retail asset today in their book. And the last 5-6 years, the retail book has grown big time. But now, if you see delinquencies or the NPAs have started coming on the retail side, and RBI recently came out with direction on the risk weight. Now, they want all banks to increase risk weight in the unsecured segment. So everybody's slowed down there because of overheating. And on the capex, again, if you see on the capex side of on the private sector capex, and that's not happening. So corporate lending is not happening. On the retail side is overheating. And RBI putting more regulation or requirement for higher capital is there on the retail side, and on the liability side the CASA ratios is falling. So I see three big challenges for the banking industry going forward.
Okay, these are the three big challenges that you see for the banking industry. But when we talk about the study itself, for the first time, the BT-KPMG study has started ranking the large NBFCs, and we've actually seen Bajaj Finance has emerged as the winner this time around. Investors, however, seem to have made no money in the Bajaj stock in the last 3 years, despite the market being buoyant. Of course, we're recording this at a time when we've actually seen the financial year ending with big spike coming in on the Bajaj twins, and that's again with the buzz probably of Bajaj Housing Finance going to be probably coming out with an IPO. How do you see Bajaj Finance now planning going forward from here?
Yes, so see, we all have seen the way Bajaj Finance has given return in the last 16 years. It's a multi-bagger stock. But yes, I agree. In the last 3 years, the returns have been stagnant. I mean, they have not gone up. I mean, I see the three major things that have happened with Bajaj Finance. One, we have seen in the last 3 months a major management reshuffle has happened. Anup Saha has now been, he's, he will take charge from 1st April. Now, he's the deputy MD. Within Anup Shah, that deputy MD, there are 3 COO they have promoted. So there's a new structure in place. And Rajiv Jain, who built the NBFC in the last 16-17 years, he's still the MD. But when I talk to people outside, they tell me that maybe he will take charge as vice chairman, and Anup Shah will become the MD CEO. So a lot of uncertainty there because people want to know, because Rajiv was the guy who built the NBFC. So what will be his role tomorrow? So there's a lot of uncertainty. I'm sure that will get cleared in the next 1 month. Second, the competition. If you see, in the last 1 year, we have seen Jio Financial coming from the Reliance table, and getting into areas where Bajaj Finance was bringing big business in the last 16-17 years. We saw Piramal coming in, SME, car loan and home loan. I mean, they bought DHFL, so they have a huge portfolio of home loan. They want to get into affordable housing. Then we got Godrej, again a big player. Poonawala, again, is a Pune-based, very close to, Bajaj Finance headquarter. So we saw, big corporate-backed NBFC coming into this space. So that's the one, the big challenge or the competition which is coming, from NBFC. Second is the banking sector. Even the banks are now getting into new geography. They're getting into semi-urban, or smaller centers where today Bajaj Finance is present. Even the segment, if you see consumer durable, I mean, Bajaj made it because of consumer durable. Now, banks are getting into consumer durable. So, a lot of competition, number two. And number three is the size and scale. If you see today, Bajaj Finance has a book balance sheet size of around less than 2.5 lakh crore. Now, is bigger than many mid-sized bank. Whether it's IDFC Bank, whether it's Federal Bank, whether you take CSB or a Maharashtra Bank, is bigger than mid-sized bank. And recently we have seen SDFC Limited getting merged into SDFC Bank. So when you scale up under an NBFC model, the challenges comes on the liability side because you don't have CASA, saving and the current account deposit. You are dependent on fixed deposit where the rates are higher. So your cost of fund is higher. When your cost of fund is higher and you are competing with banks in home loan, car loan, consumer durable, is very difficult when you have book size of 2.5 lakh crore. So at some stage in future, they have to think about, owning a bank. So that's the third big challenge, which people see or the investors see in this NBFC, because from 2.5 to 5 lakh crore journey is going to be very challenging and difficult. Sakshi.
Absolutely, Anand. Well, thanks a lot. Truly appreciate you giving us all that overview about what's really happening in the industry, the study key insights as well, and what do we expect going forward from here. Let's shift gears and now get Krishna into the conversation as well, because of course the major focus of this issue is on the best banks, the study, and you will get to know an insight into what has happened. But there are other key big stories also that you have to watch out for, especially two big interviews that have been taken exclusively in this edition. Eli Lilly's chairperson and CEO David Ricks, and as well as we've also got a special interview with Romal Shetty, the South Asia's big boss now for Deloitte. So Krishna, let's start off with Eli Lilly first. Because that's one is something that everybody would be out there looking to understand. We've understood, we've gone through stories which talk about the viral drugs that this American pharma company has launched already. So in the category of diabetes and of course for obesity, the weight loss drug that everybody is talking big about. So tell us, in this interview, what have we garnered into the chairperson's view as far as how does he see India as a launch pad for the new growth trajectory for the company using these drugs?
Sakshi, thank you very much. No price for guessing here. Obviously, India is a key market and the thrust is obviously on chronic. So they're very optimistic of diabetes and obesity. And these are two issues which I think are likely to confront the Indian population for many years to come, regardless of which part of India you're in or regardless of your gender. So I think the ability to open up the market completely in India is what is most attractive to the company, and that's exactly what Mr. Rex has spoken of. I'd like to just highlight a few points here. It's been a bit of an interesting mix of portfolio for the company. They may not be perceived as being as aggressive as Indian counterparts, but the moment you have a plain chronic, your margins tend to take off, and your ability to have that long-standing relationship with the consumer, with the patient, if I may say so, is that much stronger. So that's the approach. There's an interesting tidbit I'd like to pick up here. Both interviews, and I'm just digressing for a second, a bit with Romal Shetty or with Mr. Ricks, the backbone is technology. So if you speak of AI, if you speak of the fact, so just to get back to pharmaceuticals for a minute, the whole ability to use AI and reach out to the chemist portfolio, the chemist network, is what he's looking at. And I'm speaking of that from a very basic point of view. The bottom line is the fact that through technology in India today, large companies have a tremendous access to consumers or markets that they perhaps didn't know existed earlier. So he's banking all of it. The fact that he's got a product portfolio that's relevant to India. So I think these three or four factors put together makes for a pretty potent combination.
Absolutely, and very, very interesting one at that as well. The other big interview with Romal Shetty, of course, one of the youngest CEOs and taking charge at a time which are being seen very exciting times in India for a big four consulting firm, because a lot of innovation and transformation is really taking place. Do tell us what are the insights that viewers will get from this interaction as to what is Shetty's priority going to be going forward from here?
Yes, absolutely right. It's hard to believe that Romal Shetty is only 48 and he's got really the most complex job, if I may say so. Now, Deloitte has a whole portfolio of businesses. It could be taxation, could be audit, consulting, to just name a few. But Romal, an old KPMG hand, obviously has set his eyes on growth, and he believes that as head of South Asia, India will propel a large part of the growth. He's obviously very bullish about the fact that the China Plus One strategy is now a reality, and Indian manufacturing can easily up the game and reach a position of scale, which is one part of the story. To get back to what I said to you a minute earlier, in terms of tech, I think the consulting piece is where the tech part will flow into, because he now believes that his clients see a clear merit as far as efficiency and productivity are concerned, and that's where the AI part of the story comes in. So I think, in my opinion, based on what Romal said and the way Deloitte is structured, it's going to be the beginning of a completely different journey. So the whole idea of looking at it just as a classic consulting company or part of the Big Four, that will be put to the test eventually, because we are seeing a complete reorientation and a disruption of the existing businesses, and obviously for the better. And growth being at the centerpiece of this strategy, I think will just flow as a consequence.
Okay, understood. Well, thanks a lot, Krishna, for sharing all those wonderful insights from these two big interviews. I'm sure all the viewers must be very, very excited to read this one as well. Thanks to both of you for sharing such wonderful insights from this new edition. So all the viewers, if you've still not got your hands on this edition, please do go out there and grab your copies. This one is something that you don't want to miss, in case you're looking to understand what is, how is India being looked at from the top view, whether it is from American giant companies or from the big four consultancy firms or from the largest weighted index on the stock markets, that's the banking and the NBFC space as well, and how are they all reflecting the state of the economy and the way we are going to be progressing going forward from here. Many thanks for tuning into this very special edition of BTS, but do stay tuned, as Business Today TV will continue to get you more coverage from the world of business and stock markets up on your screens very soon.